You work hard for your money, you earn it, you spend it, you try to save it. But do you really truly know where every single dollar is at this very moment? If you cannot answer that question with a resounding yes, then you are living in financial denial. Bank reconciliation is the process that ends the denial. It is the simple, powerful act of comparing the cash records you keep for your business or your personal life with the official statement your bank sends you. This is not just about balancing a checkbook. It is about taking control and owning your financial truth, one transaction at a time. It is your financial reality check. So why does this matter so much? Why can't you just trust the bank's number? Denial is expensive, people. Ignoring your accounts is an invitation for trouble. Bank reconciliation is your first line of defense against costly mistakes, whether they are yours or the bank's. It is your personal fraud detection system, sniffing out suspicious activity before it spirals out of control. Most importantly, it ensures the financial information you rely on to make big life decisions is accurate and trustworthy. The main reason your records and the bank's records don't match perfectly at any given moment is simple: timing. Life doesn't stop and wait for the bank to catch up. These are called timing differences, and they are perfectly normal, but you must account for them. The most common one is a deposit in transit. This is money you have received and recorded in your books, but it has not yet been processed and credited by the bank. Maybe you dropped it in the night deposit box, or a mobile deposit is still pending. It is your money, but the bank just does not know it yet, creating a temporary difference. On the flip side, you have outstanding checks. You have done the right thing. You have paid a bill, you've written the check, and deducted the amount from your own records immediately. However, the person or company you paid might not cash that check for days or even weeks. Until they present that check to the bank and the money is withdrawn, the bank statement will show a higher balance than what you know is truly available. These outstanding checks are your promises to pay, and you must honor them by keeping track of them until they are finally cleared from your account. Alright, it is time for action. No more excuses. You need a plan. The first step is to gather your documents. Get your bank statement for the month and your own cash records or checkbook register for that same period. Sit down and methodically compare every single item. Go line by line. For every deposit, every withdrawal, and every check listed on the bank statement, find the matching entry in your records and tick them both off. This might seem tedious, but this is the work. This is how you take control. The items left unticked on either document are the reconciling items you need to investigate. Now let's build your reconciliation statement. It has two sides that we will work on separately until they meet in the middle. Start with the cash balance shown on your bank statement. To this number, you will add any deposits in transit, the money you recorded but the bank hasn't yet. Then, you will subtract all of your outstanding checks, the checks you wrote that haven't been cashed yet. After making these adjustments, you will have what is called the adjusted bank balance. This number represents what the bank's balance should be once all transactions in motion are completed. Next, you will work on your side of the equation. Take the cash balance from your own books or checkbook register. To this number, you need to add any interest the bank paid you that you haven't recorded yet. Then you must subtract any bank service charges, fees, or automatic payments that you didn't know about until you saw the statement. You also need to correct any errors you find that you made in your own records. After making these adjustments, you will have your adjusted book balance. This is the true, correct amount of cash you have according to your updated records. You must become a detective when it comes to your money. Errors are financial red flags and you need to spot them before they cause real damage. One of the most common mistakes is a simple transposition error. This happens when you accidentally flip 2 digits while writing down a number. This small mistake creates a $9 difference. If your reconciliation is off by an amount divisible by 9, look for a transposition error first. Another frequent error is an omission. It is easy to forget to record a transaction, especially in our fast-paced world. When you reconcile, you will find these mystery withdrawals on your statement that are missing from your records. These are not fraud, they are just moments of forgetfulness. Then, there is the big, scary red flag unauthorized transactions. If you see a purchase you did not make or a withdrawal you did not authorize, you must act immediately. QuickBooks' other accounting software can automate much of this process. They connect directly to your bank feed and try to match transactions for you, which saves an incredible amount of time and reduces simple data entry mistakes. If this helped, Please like, subscribe, and share. Download the reconciliation template, link in description.